First, I want to thank my wife, Jamie Pasquarello, for helping out with everything. And second, I want to thank Atlas for hosting me at this convention. What an awesome opportunity. I want to start with an analogy. Hear me out. This is not directly related to the presentation and what I'm going to be talking about, but keep this in mind throughout the entire presentation. I want to talk about the difference between easy and hard versus simple and complex. So let me tell you a quick story. Imagine you're trying to improve your fitness. So you decide to walk a mile. Pretty simple, not very complex, very simple. But in order for you to actually achieve results, in order for you to actually improve your fitness, you're going to have to walk 1 mile every single day for a long period of time. And when you add that everyday component, all of a sudden something simple, easy to do one time becomes very difficult. But the only way you're actually going to make a difference is if you do it every single day. So if you look here on the screen, I got a graph kind of going all over the place. In the top, the red bar right there, that's complex. So everything, before you know what you're doing, everything is complex. And that's kind of the whole point of this presentation. I'm going to talk about bookkeeping and finance. Hopefully, I'm going to simplify it for you so that it's not complex. Same thing with working out. If you don't know how to work out, it seems really complex. But if you learn how to work out, if you learn how to run or how to hit the gym, it becomes simple. So education and experience can bridge that gap between simple and complex. Take a pre-trip inspection, for example. If you don't know how to do it, incredibly complicated. Once you learn how to do it, not very complicated. But also, just going out and doing a pre-trip inspection one time, that's pretty easy. But if you just do it once, you're not actually going to catch things that need to be fixed. So it becomes really hard when you do something simple every single day. So this presentation, all about bookkeeping, a little bit of taxes. Let me just start by saying I'm a bookkeeping expert. I'm not a tax expert. So I don't pretend to be a tax expert. I will talk about a few tax ideas and concepts just to make you aware of them, but not a tax expert. And then we'll finish the presentation with some finance stuff. Okay, let's talk about bookkeeping first. This is the foundation of your business, accounting, and finances. Number one piece of advice I have for everybody. First thing getting started, if you don't have it already, strongly recommend you need a separate bank account just to keep your personal transactions separate from your business transactions. That's my number one piece of advice. If you don't do anything after this presentation, strongly recommend just get a separate business checking account and keep things separate. QuickBooks Online, accounting software, pretty basic, pretty simple to use, and pretty affordable. Also recommend, once you get the separate business checking account, it's $35 per month. Invest in QuickBooks Online. If you're trying to do your bookkeeping, I promise you it's going to make things much more organized. So, what is a bookkeeper? People know what a CPA is. What is a bookkeeper? A little bit more kind of hard to understand. So I'm going to give you a nurse and a doctor analogy. Imagine you go to the hospital for a couple days and the nurse is going to take care of you on a daily basis. The nurse is going to check in on you, take your vitals, help you with things, and then the doctor performs the procedure or maybe writes the script, and then you're good to go. Same thing with a bookkeeper and a CPA. Both really important, but also both really different. Both know a ton about medicine, both know a ton about accounting, but their roles are different. So a bookkeeper takes care of you on a daily, weekly, monthly basis, and then the CPA or the tax accountant comes in at the end of the quarter, end of the year, and files your taxes for you. There's really 4 functions that a small business owner might have when it comes to accounting. People ask me all the time, are you an accountant? And I say, yeah, I'm an accountant, but there's more to it than just that. So we have bookkeeping, we have taxes, and then we have payroll. So if any of you have any employees, or if any of you are an S corporation, I'll talk about that later, you're going to need payroll, and then there's fractional CFO services. So those are kind of the 4 things that an accountant can do for you. Okay, so how to do it? How do you do your bookkeeping? If you want to do your own bookkeeping, absolutely, you certainly can. I'm going to give you a quick 60-second breakdown of how to do your own bookkeeping. Super basic. It starts with categorizing transactions. Bookkeeping is a 3-step process. You have to categorize transactions, reconcile your accounts, and then finally you generate your financial reports. Kind of the whole point of doing bookkeeping. So categorize transactions, money coming in from your settlement sheets every single week, money going out, fuel, repairs, contractor labor, those are probably expenses. Your truck payment, those are your expenses. I recommend kind of the analogy I talked about in the beginning, try to do this daily or weekly. If you wait until the end of the quarter or the end of the year, it's gonna be so stressful. You're gonna have to do 12 months of work in 2 days trying to do all of your bookkeeping. I know it's not glamorous, it's not fun, but unfortunately it's necessary. You have to file your taxes. In order to file your taxes, you need financial reports. In order to get financial reports, you need the bookkeeping. So that gets us to step 3, the bookkeeping. You generate financial reports. And then of course you do it annually for your taxes, but then also monthly. This is often overlooked. Monthly financial reports are just as important as your annual financial reports so that you can actually see, is my business profitable? That's kind of the whole point. That's why we're here. So this is just an example. This is what a profit and loss might look like. Don't get too caught up on what the actual words and the actual numbers say. This is just an example of a profit and loss. So the top there, we've got income, sometimes called sales or revenue or services. That's your gross income. That's money coming in. And then below that, we have all of your expenses. And this could be different for every business, but it's going to be itemized. This is what I was talking about when I said categorize your transactions. So on a daily basis, as you spend money, as you write checks and swipe your card, those individual transactions get put into these buckets, these categories. And then we can see at the end of the month, how much did I pay on insurance or fuel or supplies or software or payroll, utilities. And then we have our net income. That's the most important number. How much money do we have left over? That's what you're going to pay taxes on. The gross, the top line revenue, it's a big number, it's a cool number, but it doesn't matter as much as the bottom net income. That's what we're paying taxes on. I know I mentioned QuickBooks Online in the beginning. If you don't want to get QuickBooks Online, I do actually have a free profit and loss Excel template. You can scan the QR code, open up your phone, open the camera, and you can scan that. It takes you straight to my website. It's totally free. It's an Excel template, so you have to be able to use Microsoft Excel, but it's a good alternative if you don't want to spend $35 per month. You can at least check out the Excel template and try to track your income and expenses using that template. Still recommend you get QuickBooks Online, but if you don't want to spend 35 bucks a month, not a bad option. If you aren't super familiar with Excel, it might be kind of challenging, but I'll let you guys take a look at it. Okay, so when do you hire a bookkeeper? There's a couple scenarios that I want to walk through. First question, do you have time? Do you have time to do your own bookkeeping? If you don't have time, you don't really have an option. You have to find somebody to help you, whether that is your spouse or your friend or your office manager or an outsourced bookkeeper. If you don't have time, you have to hire somebody. Let's say you do have time, but you don't know how to do it. If you can't figure out how to do it, and if you don't know how to do it, maybe you can't use a computer, or maybe numbers just make your brain hurt, which I totally get. If you have time, but you can't figure out how to do it, same situation. You have to hire somebody. Now, final scenario, you do have time, you know how to do it, give it a shot. Maybe try to do your own bookkeeping for the first year, first 2 years. It's not a bad idea. It'll give you a really good idea of where you are in your business and your finances. If you do hire somebody, of course, just like outsourcing anything, it's going to save you time. Everything's done for you, and you also have the peace of mind knowing that everything is done properly, assuming you hire a good bookkeeper. Minimum, this is just what I've seen, even for my owner-operators who just have one truck, one driver, the minimum I've seen is about $250 per month. So just to kind of put that in your guys' minds, in your brains, if you're thinking about outsourcing it, expect at least $250 per month for the bare minimum. It could certainly go up from there. Tax deductions. I'm not going to talk too much about this because the IRS has 6,000 pages that you guys can read if you want to figure out what are tax deductions, but they give some general outlines. If you're spending money, it needs to be necessary and ordinary. What does that mean? Nobody really knows, but what I often think of is just kind of using common sense. I have a list here of things that would probably be considered a business expense for you, but I don't want to go too much into it because everybody's business is different. It might look different for you, but we've got advertising, your cell phone, if you have a home office, of course, if you're paying for internet, licenses, that's big for trucking companies, fees and insurance, interest on your truck loan, potentially retirement contributions, continuing education, meals, your vehicle, and then traveling to this convention. Perfect example. Per diem tax deduction. Before I get too much into this, I just want to say, like I said in the beginning, I'm not a tax expert. So I put this information in here, but I just want to give the fair warning that I'm not a tax expert. So I'm gonna go through this information. If you have questions specifically about the per diem tax stuff, definitely recommend reach out to your tax accountant, reach out to your CPA, do some research. I just wanted to put this in here because I think it's so important. So first of all, you are subject to the hours of service regulations if you're going to take the per diem tax deduction. October 1st, 2024, is $80 per day. So regardless of how much you spend on food that day, you can take an $80 per diem. For a partial day, $60. The deduction amount is different from the actual per diem amount. Just like if you're a regular business owner with meals, it's only 50% deductible. Same concept with the per diem. The deduction amount is only $64. So you'll get an $80 per diem, but it's only deductible $64 per day. So that's only going to reduce your taxable income by $64. Non-CDL riders, if you have loaders or helpers, anybody helping your business, maybe you have your spouse is also a rider and your spouse helps with the bookkeeping or the office administration of your business. Non-CDL riders who are performing other duties can take a 50% deduction. Keep in mind for Q1, 2, and 3, January through September, $69. So it increased October 1st. Okay, I know there's a lot of words on the screen. I'm just gonna go through it. Like I said, if you have any questions, this is just to kind of familiarize you with the idea of the per diem. So in order to qualify for these deductions, we're getting real technical here, but the IRS publication states that you are traveling from home. You need to be traveling from home. And so you need to meet one of or both of these requirements. There's an and statement between these requirements. So your duties require you to be away from the general area of your tax home, substantially longer than an ordinary day's work. And, not or, but and, you need to sleep or rest to meet the demands of your work. It further states that taking a nap does not satisfy the requirement. However, you do not need to be away from home for a whole day, as long as your relief from duty is long enough to get necessary sleep. So what does that mean? If you're an owner-operator, this does not apply to company drivers. You get to claim the 80% of your per diem as a tax deduction. Each day you're away from your tax home, and I'll get into that. A partial day, 75% for arrival and departure days. So not the full per diem, but you can take a 75%. Local drivers who start and end on the same DOT hours of service cannot claim per diem. So what's a tax home? You need to satisfy 2 of these 3 requirements, and I'm just going to go through this quickly. You perform part of your business in the area of your main home and use that home for lodging while doing business in the area. So you need to satisfy 2 of these 3. The second one says you have living expenses at your main home that you duplicate because your business requires you to be away from that home. And then the third one, you have not abandoned the area in which both your historical place of lodging and your claimed main home are located. So basically you need to have a house. Like you need to live somewhere. Like you can't just live out of your truck and then try to claim the per diem. That's basically what that's saying. So let's summarize. You must be away from your home for substantially longer than a normal workday. You must have a home from which to be away from. If you meet both of those requirements, For any days on or after October 1st, you can deduct $64 for a full day and as a driver, and $40 for your ride-along helper. Okay, let's talk about accounts payable. So this can get messy quickly, especially as you're growing your business. First couple months, first couple years, if it's just you, this might not be as big of a deal. But as your business grows, it's really important that you develop a system for managing your accounts payable. We can be talking about helpers, riders, your repairs and maintenance, any vendors and contractors you might have. It's important to clearly define expectations or terms. I always like to have it in writing. Even if it's a family member, I always have a contract. Put it in writing, have terms, payment terms. Are you gonna pay weekly, net 15, net 30? Clearly communicate upfront. That way there's no confusion, no frustration down the road. Streamline the receipt of your bills. Like I said, not a big deal if you're brand new, just getting started, but as your business grows, it's going to become a much bigger deal. If you have drivers or helpers, if you have a lot going on, if people are sending you text messages and emails and giving you pieces of paper with chicken scratch on it, it's going to become overwhelming very quickly. So come up with a process, streamline this and do it early and do it in the beginning. That way your vendors and contractors know what to expect. I have this up here, avoid mailing checks. That's just my personal preference. Checks tend to get lost in the mail. They can take 10 to 15 days to arrive. Your people don't cash them, and then you're struggling with cash flow. You don't know where your cash flow is. I try to avoid mailing checks at all costs. So, with that being said, I'll collect ACH information from all of my vendors and contractors. That way, I can pay people direct deposit. Great for drivers. Hopefully, this should be a good thing for your drivers if you have multiple trucks. That way, the money shows up next day. You could pay somebody on Thursday, it'll show up in their bank account on Friday. I try to avoid PayPal, Cash App, and Venmo. Once again, that's just personal preference. I just feel like things can get messy quickly. If you're receiving money or sending money through Cash App and Venmo, it's all over the place. It's just hard to track. So I just avoid those things. Preferred ACH. If not ACH, I'll mail you a check. If you do have a lot of accounts payable to manage, I would recommend set a day of the week. Develop a routine, develop a system, a process, set a specific day of the week for paying your bills. Like I said, not a big deal if you're brand new, just getting started with one truck, but as your business grows, it's gonna become an issue. So pick a day of the week, that's the day I'm going to process accounts payable. If you're using QuickBooks Online, makes it too easy. You can enter all your bills into QuickBooks, and then you can run an accounts payable report. Loans. I'm assuming a lot of you probably have truck loans. This happens all the time. The loan payment is not an expense. So every month you've got $1,500 going out of the bank account, going to your finance company. The actual loan payment is not the expense. You have to worry about the interest and the principal. And then we have depreciation. So depreciation can get complicated pretty quickly. I'm not going to explain everything about depreciation. We have bonus depreciation, accelerated depreciation, Section 179 depreciation. There's straight line depreciation. If you have a box truck, it's typically depreciated over 5 years. If you have a tractor, typically depreciated over 3 years using straight line depreciation. Of course, you can accelerate your depreciation, potentially taking the entire purchase price of your truck and expensing it in the year that you bought it. Definitely recommend talk to your CPA, talk to your tax accountant about that. The loan origination document, the bill of sale, the amortization schedule, this is all information that you should be able to get whenever you purchase a new truck. And I promise you, this is going to be information that your bookkeeper and your accountant are asking you for. So the amortization schedule is just going to show the interest and principal every month, the bill of sale, of course, and then the loan origination document will help your bookkeeper and your accountant just record the loans properly. We're gonna need monthly statements because we need to see how much are we paying in interest and how much are we paying in principal. Because like I said in the beginning, the actual monthly payment in and of itself is not an expense. We're just moving money from our bank account to our loan account. But there's an interest portion of that loan. So you recognize the expense of your truck by calculating the monthly and annual interest, and then also calculating depreciation. So just to give you a simple example, let's say you bought a box truck for $50,000. If you use straight line depreciation, you would take a $10,000 depreciation expense for the next 5 years for that truck. So it doesn't matter what your down payment was, it doesn't matter what your monthly payment is on your loan, it's a $10,000 annual depreciation expense plus whatever interest you're paying on that loan. Here's a list of tax filings. I'm not going to go into too much detail. This is just to orient you to some numbers and some names so that you're familiar with these tax filings. 1040, individual income tax return. Everybody files this, whether you're a W-2 employee or a business owner, April 15th. If you're a partnership, March 15th, it's called a 1065. S corporation, 1120S, also March 15th. If you have a partnership or an S corporation, you're going to get a K1 from your accountant, and you're going to use that K1 to file your taxes. You've got quarterly taxes, April, June, September, January. So for tax year 2024, your quarterly payments for this year were due April 15th, June 15th, September 15th, and then the final payment is due January 15th, 2025. Payroll. If you have employees or if you're an S Corp and you're running payroll, strongly recommend hire somebody. I'm an accountant and I don't even do my own payroll. 1099s. If you have independent contractors, 1099s are due January 31st. And then finally, specific for you all, 2290, the heavy vehicle use tax, August 31st. Can't forget that one. This is a hot topic, 1099s versus W-2s. What is an employee? What is an independent contractor? The rules are constantly changing. Generally, what I try to tell my clients is that if you are telling these people what to do, when to do it, how to do it, if you're giving them equipment, to me that sounds like an employee. So if you get a second truck, get a driver, you tell him, go pick up this load at 9 a.m., go here tomorrow at 4 p.m. and deliver it. Here's your first aid kit. I'm going to provide you with an ELD. That to me sounds like an employee. But if you have somebody else who has their own truck, no forced dispatch, they have their own ELD, they do everything on their own, that to me sounds like an independent contractor. Some really serious tax implications for a 1099 versus a W-2. We have Social Security, Medicare, unemployment compensation, and workers' compensation. I've got some percentages on the screen. Doesn't matter what the percentages are, it just adds up quickly. Potentially 20% or more if you have employees. You as the employer have to pay Social Security, Medicare, unemployment, workers' comp on your employees. Versus if they're an independent contractor, you don't have to worry about that. So that's why so many people try to misclassify their employees as independent contractors, because it's going to save you 20% on your payments to your contractors. If you do have independent contractors, some people like to be an independent contractor. They have to file their own Schedule C. They're able to write off expenses. But like I said, they're paying their own Social Security, Medicare, and they have their own insurance. S Corp. S Corp benefits. So just to be clear, you're still an LLC. You're not changing the legal structure of your business. You're just changing the tax election for your business. It usually has benefits when your net income becomes greater than $40,000 per year. So we have self-employment tax, also called payroll tax, sometimes called FICA or Social Security and Medicare. Like I said in the screen before, it adds up quickly. Social Security, more than 6%. Medicare, 1.45%. Multiply that by 2, we're talking 15%. So this comes right off the top if you are a business owner, self-employed. If you ever had a job before as a W-2, your previous employer paid for half, and you as the employee paid the other half. But now you are employer and employee. So you're paying 15% right off the top self-employment tax. If you're an LLC, 100% of your income subject to self-employment tax. Now, if you're an S corporation, You need to pay yourself a reasonable salary. That's why I mentioned before, if you're running payroll, if you're an S corporation, you have to have a payroll company, you actually have a salary. I see 40%, sometimes 60% of the business income. So you have your salary, and then you have distributions left over. We're not changing the business income. We're not changing the legal structure. Let's look at an example. So in this example, the LLC, $100,000. If you're not an S Corp, $15,000 is going straight off the top to self-employment tax. If you're an S Corp, you're still making $100,000, but $40,000 is going to your salary, and then $60,000 is going to distributions. So here we have $40,000 salary. That's subject to self-employment tax. So 15% on $40,000. So in this example, same business, just changing the tax structure. Same income, $100,000. But in this example, you're going from $15,000 down to $6,000 just in self-employment tax, potentially saving $9,000. Keep in mind, there are increased tax filing fees because, like I said before, there is an 1120S as an S corporation. You get a K1 and then you file your 1040. Also, payroll processing fees. If you hire a payroll company, it's going to be $40 to $60 per month-ish for payroll processing fees. That's why I said it only becomes beneficial when you exceed $40,000. Hiring your kids. This is an interesting idea. It only works if you're not an S Corp and your kids are under 18. Of course, you can still pay your kids, you can still hire your kids if you are an S Corp and if your kids are over 18, but you're just not going to get the tax benefits that I'm about to talk about. So there's no payroll tax or unemployment compensation on wages paid to your kids. That's huge. No payroll tax. We just said that was 15% and no unemployment compensation. Now your kids can take the federal standard deduction. This year, it's a little bit more than $14,000. So you could potentially pay your kids $14,600 to work in your business, and they're not going to pay federal income tax, and you're not going to pay payroll tax or unemployment compensation. So the only tax that they would have to pay on that $14,000, state and local income tax. And then you as the business get that $14,000 deduction, and your kids pay basically no taxes except for state and local. They will have to file their own taxes. They will get like an actual W-2. You have to run payroll and they'll get a W-2. Keep in mind though, their work needs to be legit. You can't have your 10-year-old driving your box truck. The work needs to be legit and it needs to be paid at a reasonable rate. So you can't hire your 14-year-old to clean your home office and pay him $200 an hour. So it's got to be legit work, paid at a reasonable rate. Bonus, this is huge. They could contribute to the Roth IRA. So if you know anything about Roth versus traditional, the IRA, the Roth IRA is taxed now, but not taxed when they pull it out, when they retire. So they're basically paying no federal taxes. You get the business deduction, contribute to the Roth IRA, it grows tax-free. Loans and credit cards. This is important because the banks, you need to be bankable, especially as a trucking company. You need to be able to go to the bank, get financing if you're trying to acquire trucks. Every bank is going to ask for taxes. You need to be current on your taxes and your year-to-date financials. And then also, it helps to be profitable. Most banks aren't going to give you a loan if you're not profitable. So I know it's tough because entrepreneurs like to write off everything and show little to no income, but then you go to the bank and try to get a loan, they're not going to give you a loan if you're making negative $5,000. Loans and credit cards, of course, help with cash flow. It's important to set up an LLC for many reasons, but specifically for loans and credit cards, because it can open up doors that aren't necessarily available to people who are just non-business owners. One really cool thing that I do in my business is I apply for new credit cards. Chase and Amex are great for this. I'm not sponsored by Chase and Amex, but they give 0% interest, depending on your credit score, 0% interest for 12 months. And you can get $5, $10, $15, $20,000 sometimes. This is just a side note, but I just applied for, so Chase, you can roll over your credit limit. So you could apply for a $5,000 Chase credit card this year, 0% interest, use it, pay it off, of course, always pay it off after the promotional period, and then you could reapply for a different Chase credit card, and then you can roll over your credit limit. So you could turn that $5,000 into $10,000 next year by rolling over your credit limit, and then you get a new $10,000, 0% interest, basically free money for 12 months. Credit card rewards, not huge, but truckers, they spend a lot of money on repairs and maintenance and fuel. So you can get credit card rewards. A lot of business credit cards offer 2% cash back, which adds up. 30-day cash flow buffer, not a huge deal, but still 30 days is better than none. If you swipe your credit card today, of course, you don't have to pay your credit card off until next month. Like I said before, strongly recommend everybody always do your best to pay off your credit card bills every single month. I would never advocate for anybody paying credit card interest. And then finally, SBA loan. I got an SBA loan last year, October, prime +2, pretty high interest rate, but I got a $150,000 cash SBA loan last year. You have to be in business for 2 years, but this can be huge for payroll, marketing, general business expansion. This all circles back though. You need to have updated and accurate financials, and you need to be current on your tax returns in order to be bankable. Okay, I think I have 3 more slides. So now we're going to get into much more practical ideas and concepts and strategies about finance. So that was all about like bookkeeping and taxes. Now we're going to talk about actually managing the finances of your business. So here's a QR code. Take out your phone. You can scan that QR code if you want. This is a cost per mile spreadsheet. And I also have here, I don't know if you can see it, but free code Atlas. I usually sell it for $5 on my website, but y'all can download it for free using code Atlas. So don't get too caught up with the numbers and the words on the screen. That's not as important as the actual concept of knowing your cost per mile. You need to know how much am I spending per mile so that when you get the loads, the opportunity to take a load, you can see, okay, what's the miles for the load? What's the pay? What's the rate per mile on that load? Does it make sense? Or potentially, maybe you want to grow. Maybe you want to get a new truck. So you figure out, if I get a second truck, a second driver, how much am I going to pay him? How much is the truck? How much is insurance? How much is fuel? What's going to be my cost per mile to run that second truck? And does that make sense with the current freight market? I had my trucking company in 2021 and 2022. I lived by this spreadsheet every single day. I was talking to my dispatcher. I was checking my cost per mile. I was checking the rate per mile. Does it make sense? So I'll just go through the numbers here real quick. And like I said, the specific words and numbers, they might not necessarily directly apply to you and your trucking company, but just the idea of knowing your cost per mile, I think, is so important. So we have top line here. So the numbers in the top are all numbers that I enter. And then the blue numbers are mostly formula driven. So just right off the top, revenue per week. What's my goal? And this is just a budget. This is just a forecast. This is just a prediction. So this is not necessarily how much money did I make last week, but generally, like, what's my goal? If I know how many miles I'm going to drive, and if I know generally what's the rate per mile, you can calculate your revenue per week. So we have revenue per week, top line, second line, miles per week. And then you just multiply miles per week by your anticipated rate per mile, and then you get your revenue per week. And now we need to calculate fuel. So of course we have an actual cost of fuel, but then we're trying to budget in the future. So these are just a budget, just a forecast. We're just planning, we're just seeing what might happen. So we have diesel cost per gallon and miles per gallon. If you don't know your truck's miles per gallon, definitely recommend try to figure that out. That way you can anticipate how much am I going to spend on diesel. If we take the the miles per week, and if you know how many miles per gallon you get, you can figure out how many gallons am I going to buy that week. And then if you know the diesel cost, you can, to a decent degree, you can predict how much am I going to spend on diesel just by taking the number of gallons multiplied by the cost per gallon. Down below here we have the truck and trailer cost per month. So I have everything in the top line per month. And then the formulas are going to break it down per week. Everything I did for me and my trucking company, everything I did was on a weekly basis. So we have the truck and trailer cost per month. Now, if you have a driver, you can enter that in on the next line. How much is your driver pay per mile? Or maybe it's a flat rate per week, or maybe it's a percent of revenue, but you need to account for your driver pay. And if you don't have a driver, that's fine. How much do you want to make? Maybe you want to make $1,500 a week. Maybe you want to make $2,000 per week. There's always a driver. There's always a cost to the driver. Even if you don't actually have a second driver, there's always a cost for the driver. Insurance, you guys know that's huge. And then I have other overhead per week. I budgeted for about anywhere from $100 to $200 per week just on whatever might come up. Your ELD subscription, your QuickBooks subscription. I had an iPad in my truck. I paid for that every single month. Catch all, $100 to $200 per week of just everything else. And then I had a factoring fee and a dispatch fee, but I don't think you guys have that. But my factoring fee was like 2 or 3%, and my dispatch fee was anywhere from 6 to 10%. Okay, so that's the top. That's everything in the orange. That's the top. That's what we know is going to happen. And now we're going to take that on a monthly basis and see what is our weekly cost. So below the orange numbers, we have the blue numbers. So now we have my weekly diesel cost. Like I said, miles per week divided by miles per gallon multiplied by cost per gallon gets you the weekly diesel cost. Weekly vehicle cost. So there's 52 weeks per year. So I actually do 4.3 because there are actually 4.3 weeks per month, just getting real nitty gritty into the details, but there's 52 weeks in a year. So it's not an even 4 weeks per month. So I divide all my monthly costs by 4.3. That's just how I do it. But the weekly vehicle cost is going to be your monthly vehicle cost divided by 4.3. Your weekly driver pay. If that's you, you can just input $2,000 per week. Or if it's your driver and you pay him maybe 40 cents per mile, you know how many miles you're planning on driving, multiply that by 40 cents per mile. Now you know how much you're expected to pay your driver per week. Weekly maintenance cost, if you lease your trucks and you have a maintenance package, then you can just enter that right in. If it's 20 cents per mile, that's too easy. If you have, of course, a newer truck and you own the truck, maintenance might be 10 cents per mile. If you have a really old truck, maybe 25 cents per mile. You can figure that out on your own. What is and like I said, just a plan, just a budget, just a forecast. So generally, what is about your maintenance cost? And if you don't know that, definitely recommend, look back over the past 12 months. How many miles did I drive every month? What did I pay in repairs and maintenance that month? Oil change, tires, everything else. And then you can figure out like, oh wow, what is my actual maintenance cost per mile? Really good stuff to know. Weekly insurance cost, same thing with the truck. Monthly payment divided by 4.3. Taxes and overhead, tolls, that can change depending on your area, depending on your business. Hotel cost, if you got a box truck, got to stay in a hotel. Dispatcher, factoring, add everything up. Total cost per mile. So we're adding up the total cost on a weekly basis, dividing that by the anticipated miles we're driving. Now we know the cost per mile. And then we can figure out what kind of rate per mile can we take from that. So I know there was a lot of numbers, a lot of words, kind of a long explanation. The specifics don't matter. What really matters is the idea, the concept of doing this. And this all ties back into the analogy that I explained in the beginning. Pretty complex. If I told you all just to calculate your cost per mile, you might know how to do it, you might not. It's kind of complex, but I just broke it down. Once you do it, once you learn it, pretty simple. Education, experience can bridge that gap between complex and simple. So we're taking a complex topic, making it simple. Now, if you just do this once, pretty easy. But if you're disciplined and if you do this every single day, that's where it gets tough. But the numbers are constantly changing. How many miles per week you're driving constantly changes, depending on peak season or the off season. How much diesel cost changes, depending on the market, depending on where you are, constantly changing. Insurance, even insurance changes every year. So we're taking something easy to do once, doing it every day, doing it continuously. That's where it becomes challenging. That's where the discipline comes in, of doing these little bookkeeping and finance stuff that nobody wants to do, but this is the behind the scenes number crunching that's really going to make a difference. 2 more slides. Bear with me. I know this looks like a crazy screen, and what's on the screen doesn't matter. I just want to explain what this is. This is what I actually did in my business. So I'll be totally honest with you, my trucking company failed. I was not a very good trucking business owner, but I learned a ton about the finances of a trucking business. And because I was tracking all this information, I realized that my trucking business was failing because I was, not to get too much into it, but I was way too hands off. I tried to hire a driver and get a truck and have a dispatcher and outsource the maintenance. I didn't do anything in the trucking company, just thinking that I could run the numbers and they could be successful. Spoiler alert, doesn't work that way. You actually have to do something in the trucking company to make it work, at least in the beginning. Of course, if I had 20 trucks, I could be more hands-off, top level, but not with one truck, one driver. Anyway, load data. So this is a spreadsheet that I had on my computer. And same thing, did this every single day. Really simple, but really hard to keep up with it. I did this for 2 years, the entire time I had my trucking company. And you might have some transportation management software that might do this for you, but the same thing with bookkeeping. If you want to pay the monthly fee for the subscription, you could probably do it, or you could just do it in Excel, like I did. Okay, so in this spreadsheet, I have here miles on the left and the pay, and then my rate per mile. But I don't really care about my rate per mile because to me, every mile mattered. So I also have deadhead. So rate per mile, cool. Let's see what the rate per mile was. But then I was calculating deadhead. My dispatcher hated me because he was like, it doesn't matter. Like the rate per mile is still above 250. Like just take the load. I'm like, yeah, but I have to deadhead 100 miles to get there. Like I'm still paying for fuel and I'm still paying my driver to get there. So I always calculated the deadhead. And I only really ever cared about my total rate per mile. So I don't know if you can see the screen, but it's right there. It's one of the columns. It doesn't really matter, but it's on there, the total rate per mile. And this is just really valuable information to have. Like I would wonder all the time, like what's my average rate per mile? What was my average rate per mile last month? How did 2021 compare to 2022? It would be nearly impossible. And you can look at the DAT freight analytics and you can see what the average is across the country, but that's pretty irrelevant for us owner operators. Like if you just have one truck, like who cares what the country average is? I just care about like what's my average. And that's nearly impossible to know without keeping up with this spreadsheet on a daily basis. Really simple, really easy to just do once. A lot of discipline, really hard to keep up with it on a daily basis, but pretty useless, just like exercising. Walking 1 mile is great, but pretty pointless to do it once. In order to really see results, you gotta do it every day. And this same thing with this load data. Like if y'all are feeling inspired and you go home and you track your loads for this week, that's great, but you gotta keep with it to really collect the data and really see the point. Okay, so I had the delivery date next. Might not be useful, but I had problems with my brokers and my factoring companies all the time. So I just wanted to have all in one spreadsheet where I can just see very clearly what was this load, what was the registration number. I have there the pickup address, the drop-off address, the delivery date, the date that I was actually paid. So if I delivered all my loads last week, maybe I'm getting paid every Friday. So I'll mark the spreadsheet. When was I actually paid for that load? If you just have one truck, if you're the driver, this might not be as important, but as soon as you get multiple trucks, it's going to become really difficult. Like you're not gonna know what your truck driver is doing if you're not there with him. So I have all this data here. If I need to talk to the broker, if I need to talk to the factoring company, or maybe talk to the shipper or the receiver, I have the registration number. I've got all the details right here in my spreadsheet. Doesn't matter what the numbers are. It just matters that you track the numbers, track the information, have the data to help you run on a day-to-day basis, but also make informed decisions about trends in the market, trends in your business. Last screen, last page, and then we'll wrap this up. Is my business profitable? So if you're an owner, if you're just like one guy, one truck, I'm sure you're profitable. Like I'm sure you're making great money, but as soon as you start having multiple trucks, this becomes a serious question. Is my business actually profitable? So there's a lot going on. Let me just kind of orient you here. And same thing with the previous two screens. It doesn't really matter what's on the page. It just matters that you know this information, that you have these numbers. So if you noticed here on the previous screen, I kind of have it color coded. So orange and blue were alternating weeks. So I knew like on one week it was orange, the next week it was blue. So it just made me easy. It made it easy for me to transfer this data to the next spreadsheet. So I'll take all the loads that I delivered, and just like my cost per mile, I'm looking at things on a weekly basis. So I'll look at all the loads I delivered last week. I'll look at the revenue associated with those loads. I'll take my truck cost and my insurance. That's not changing. Divide that by 4.3. I got my weekly truck cost. So I got my revenue minus my truck cost, my insurance, factoring, dispatcher, my trailer, all the fixed cost. And then I broke it down on a weekly basis. And then the green, if you see the screen there, the green on the bottom there. So the orange and blue are all just like my fixed cost. Revenue on the top, just kind of like a profit and loss, but on a weekly basis. All run through Microsoft Excel. Orange and blue, weekly revenue, fixed cost, not changing. But then my green was my variable expenses. So here I have my driver pay. How much did I pay my driver? Was there a layover? Was there a truck order not used? So many different things can go into this. Like there's like even just $100 or $200 for a truck order not used can make such a difference on a weekly basis when you have multiple trucks. So that's why I just loved tracking all these things. I just think it's so important. That's why I'm here. It's just so important. Okay, so just to wrap this up. So driver pay, maintenance cost. How much did I actually spend? So the cost per mile was just a budget, a forecast. But now what am I actually spending? So some weeks might be great. Other weeks might not be so great. How much did I spend on maintenance? How much did I actually spend on fuel? Getting into the nitty-gritty details, am I filling up my truck on Friday? Am I counting that on Friday? I'm gonna have a full tank on Monday. Do I have an empty tank? I didn't get too lost in the details because it will all average out on a weekly basis, on a monthly basis. But just to keep it simple, how much did I actually spend on maintenance? How much did I actually spend on fuel? Other expenses, you can see here kind of like on the bottom, like the bottom right, I have like my interest paid on my truck, my iPad, repairs, tolls, like I have all the miscellaneous expenses that could ever have happened that week. And then my total cost. Got my weekly revenue on the top, total cost, and then my profit. And then this is how I decided, unfortunately, my trucking company was not profitable. But guys, this is, in my opinion, just so important that you actually track this data, have the bookkeeping, have the spreadsheets, have the finances in place so you can actually tell, is my business profitable? That's it. Q&A or wrapping it up?